All right, I'm gonna look. I'm gonna get away from the Russell. I'm gonna get a little rest. Stop hitting on a wounded animal because Froggle Toggle from StockTwits, it brought to my attention IP, International Paper Co. And indeed, I said, okay, I'll check it out. Look at the chart, and yeah, this thing has been in a stage 4 decline, monster top from a nice breakdown in March of 2018, but the ultimate breakdown in September of 2018 right here. And after that monthly count closed below that, got a lot of intra noise. This is the wicks, price action going back up, hitting previously defined resistance turn support, what I call wall, then trying to go through it, coming back up, but never able to overcome the 12-month moving average. And that is actually a great place to enter short on that turn, close to that 12-month moving average, to see if it could give it another go down to lower levels. So this was the ultimate breakdown. The 12-month moving average was still going downwards. You had an embryonic breakdown here. Is the 12-month moving average starting to go down? The month after it did. I have this crazy wick. I love these wicks on the monthly chart going away from the 12-month moving average, far advanced in a stage 2. And after that, the sellers come in and say, you've exaggerated the move. And after that, down it goes. So never play a stock, never hold long when you're below 12-month average. You're either wasting your time or you're going to go down. And for you to go back up, well, you have that overhead resistance. So you're not there yet, guys. You want to be here at the bottom. Oh, this one's kind of rough and tumble. You would have been triggered out. But there's some places where you would have run this for a year, 8-10 months. Beautiful stage 4 breakdown. And when you close back above, you're out. You might have been out. You could have probably gotten out on the weekly trendline violations or 30-week moving average, or sell stop could have been triggered. But you always go the higher trend for the direction. Never go against it, and you want to look for pullbacks as opportunities to go short. So what's up with IP? If I want to do a full stand, I want to do a forced true approach. So it's not the Russell. I know I'm picking on the Russell because it's the weakest of the US markets. So how is my New York composite? Well, it's above an inclining 12-month moving average, still back into a stage 3 after being into a stage 4. Haven't done higher lows, higher highs yet. So this is not the best. It's not the worst looking index, but it is being underperforming the SPX. See that zero line? You're in that gray zone because you're always underperforming the SPX, but you're in a stage 2. You're above an inclining 30-week moving average, but it's not the best. If you're going to go play long, you might as well buy the SPX because it's outperforming you. And here's same case here, still underperforming the SPX. So as a whole, the index is in the stage 3. You'd have to overcome, get out of this Ichimoku cloud, get out of overhead resistance. But very difficult here to... it's not turning over yet. So if we play IP, we want the index to be in a stage 3 or 4. If it's in a stage 3, then you're a little embryonic, you're a little precursor to the downfall. So you got to be a little careful before scaling in like crazy. You want to take baby steps, and when the index really starts selling over, you were in one of the leading stocks that made it turn over. And when the other rest follows, the strong ones start becoming weaker and weaker, and the index follows, then get that pressure that's going to impact everybody. IP, and where are you? What sector is this little guy? Probably basic materials and industry paper packaging. So let's check out the sectors, materials. On the weekly, Stan Weinstein style, underperforming the SPX, reaccelerating its downturn. It's not red here because you're above the 30-week moving average, it's still declining. So right here, there's some strength. About to resume, it's stage 4, but not there yet. So very, very close to continuing a stage 4 on the weekly chart for the basic materials. So that's in your favor. It's not into a stage 2. You're not fighting a bull run. You don't want to be there. You want to be in stage 3 or 4. And on the monthly chart, you are below a declining 12-month moving average, and you see basic materials pulling back close up to that, but not going through yet, hitting some monthly defined resistance right here. So will that turn back down? You're approaching key areas of if it turns back down, then that whole sector will be pushed down, as IP will with the rest of it. And let's go to the industry. And I popped it up right before industry was paper packaging. And look at that on the monthly chart. It looks like basic materials, just even a little weaker, not quite making it out, trying to go out. But you see those wicks, the sellers coming in, pushing it down. And that's why you don't fight a 12-month moving average going downwards. It's just insane. And when it's going up, it's awesome. Up, up, up. You never closing below. It's just beautiful, easy to hold. You could just look at it every month and then never look back. Those are the type of moves you want. And again, look at that extenuation candle. Sellers coming in, far away. So these type of candles, if they're close to the 12-month average, not too worrisome. But when you're extended, that's not a good sign for the next month. And what happened the next month? Down, buyers coming in, but the pressure kept bringing it. Then you're under the 12-month average, and then you're breaking down. You broke down in June, pulled back up, down. Sellers coming in, you can't maintain it above that break line, and then the pressure is too much, so down it goes. Pull back. So we're gonna see. We're really at a place where usually people are scared, where they say, "Oh no, it's going back up. It's stage 2," but you're still. Actually, it's a good opportunity to once that rally, that pullback extenuates. That's actually the best low risk environment because you have that monthly defined support turn resistance. You have that the pressure of the 12-month moving average. It's actually the best time to enter right here. If ever it pulls back above, then you know you've made a mistake and it's time to go out. So your sell stop could be close, right above that 12-month moving average, or above the highest wick, close to that breakdown level, just to give you that room for that intra volatility. But this is actually a good place to enter short for initial position size. So there you have it. New York Stock Exchange, stage 3. So we're precursor. The materials still in stage 4 on the monthly, barely out of stage 4 on the weekly, with just a few points above that 30-week average. So you want that to turn back down too. And let's head over to IP, the actual stock we want to short. We have that downtrend, so I know the best place would have been to enter. You could have taken a half position on that breakdown candle, or you could have waited for that pullback up towards that breakdown line. This would have been ideal. Here is another continuation breakdown here. The closer the breakdown pattern to the breakdown, closer to the price action, the more I trust it. But there's still support here that could have create a bounce, and it did during the month. We bounced back up, but the sellers coming in. And this probably on the weekly, we could have probably timed a good entry here. And then on the breakdown here, confirmed position. And here's probably our last entry. So there's a few spots, depending on the weekly, if we could get some precision, some zoom in power to see exactly where we could have get in. There's a few places you want to get in. You don't want to get in too far down. This may be the last chance we get in. I don't know how far that's going to go down. But you want, if you start loading up, when it starts turning over close to the top, those are better areas. And look at that. Whoa. What is this company? Look at this crazy chart. Wow, look at that dip in 2008. Seems to be creating a bigger pattern. Oh, sorry. So take a zoom back. And that is the ultimate. Let's say I go full crazy, full greedy. Here's my swing rule. Stan did use some swing rules to estimate targets. And that would bring me all the way back down to those lows of 2009, the abyss. So I don't know how this is going to pan out. Maybe bounce back up. Declining 12-month moving average. Now that's support, turn resistance. And then after that, you go down. And then, ooh. All right. Let's go on the weekly. Let's zoom in on the weekly. See what kind of details we could get there. We're below declining Ichimoku cloud, red cloud, so overhead resistance being defined. Below a 30-week moving average. This has been in a stage 4 for a little while. Get a lot of clues. The red underperforming the SPX. We could actually compare it to the composite index, still underperforming the New York Stock Exchange. See that Ichimoku cloud? Let's bring that price action back up. So right here, probably not the best time to short because we're in Ichimoku cloud. I always say you want to wait till you're out of it. It did close below here, but then you got sucked back up. You weren't below monthly defined support. So some telltale signs that you weren't fully in the clear. Up, and once you close right here, this candle right here, and look at the crazy red volume. Okay, let's zoom in here. The volume helps a lot. You had a lot of red volume candle days on those huge red down days. Big warning signs. Here, nice strong green candle. Could have created you whipsaws, but you know better. You don't go long because you just closed above a breakout formation. You want an inclining 30-week average. You want an inclining 12-month moving average. And this, somebody who knows that would have been an opportunity to enter short or at least stay on the sidelines and not go long. The pressure was too heavy. Then came back down. And this candle right here, this one here, that's the one where you could have entered short with the timing of the weekly, close to the 12-month moving average where we circle, close to the 30-week declining moving average. And you have that volume that confirmed. Sideways move. Going back up. Very scary. 1 week above the 30-week average. That could have been enough to trigger you out. And the next week after that, if you ever would decide to to exit right here, the next week when you get that close below the 12-month average, below weekly defined support, close below the monthly defined support, weekly defined support, declining. You don't get mad because you got triggered out or you decide not to stay in. You get back in here, and that could have been your first position. If ever you want all this to materialize as big top, here's your first position. And after that, down it goes. Back up. And right here, we're hogging that 30-week average. This is probably a good time here. Sometimes you have touch and goes. And sometimes you get a lot of touches touches. These good areas right here to take another half position. And there it goes, man. 30-week average keeps going down. So we could watch for a bounce of that monthly defined support right here. But here you're in a low risk area. If ever the price action goes above, closes above this higher candle right here, that means you're out. You made a mistake. But that's okay. That's why you have your risk and money management protocols in there, not to lose too many. So size, not to lose more than a percent or 0.5%. And if it goes back down, then you're on your way to see where it bounces back up. And on those pullbacks, enter. And that's it, man. That's a nice stage 4, which has actually been going on for a while. And another opportunity here to probably get in if you didn't before. All right, that's it for IP. Thank you for the heads up. I'm going to get back to hitting the Russell and the weakest of the week. If the index is weak, then the stocks in it are weak, and that's the best ultimate. But New York Stock Exchange in a stage 3, not super duper about it, but IP is definitely one of the weak candidate out there in that index. All right, guys. Thanks for watching.